What's up, guys? Welcome to Roensch Capital Charts. In this video, we're going to do a deep dive on Meta stock and try to pull out as much possible bias as we can, utilizing everything from the volume profile to psychological levels that I expect we're going to see if tested a much higher volume of trading going on around those areas. We're also going to take a look at what is the bias coming out of the options chain, and then finally, the expected move by the end of April. Now, let's get started here by taking a look at the very psychological and self-fulfilling prophecy areas that I'm watching, starting on the 4-hour chart. So you can see here I have a gray line and I have a white line. My charts are very simple. There's a good reason for that. I'm only interested in what has eyeballs. I don't want magic indicators. I don't want whatever. I just want what everyone has on their chart, and I want to look at it on the most popular time frames. It's that self-fulfilling prophecy mentality, and I wouldn't want it any other way. Now, if we take a look here, over the course of the last month and a half or so, as of the recording of this video, that 50 period, that white line, has been a major area of interest here on Meta. The stock has slowly been on the rise, slowly but surely, and that 50 period right along with it. Listen, bulls, really simple here throughout April. Ideally, I would love to see that 50 period return to an ascending position, and I just want it to stay close to the stock, of course, while the stock pushes higher, right? Now, the reason I say that is because it's very common to see the stock pull back and retest something like a 50 period, right? More common on a 4-hour chart than on the daily chart. And that being the case, if I'm a bull and I want the stock higher anyway, I want that 50 period right there along with it to keep a close psychological barrier to help protect any backslide. The tests to come in to test that 50 period don't take too much backslide because it's right there. On top of that, throughout April, notice how that 50 period as of right now is just below $500 a share. $500 a share is a huge level. We'll talk about that more in a second, but I want to see that 50 period get up above $500 a share. That adds another psychological barrier ahead of that huge psychological level of 5. Now, bears, here on the 4-hour chart, ideally, it would take getting back below 5, most likely, right? But ideally, you guys want to see, because we haven't had that 50 period acting as a resistance, going back to the beginning of this 4-hour chart, which is late January. We saw it just briefly get below and reject once before swiftly reclaiming here in late March. So you bears cracking not only below 5, but also below that 50 period here on the 4-hour chart, maybe seeing a retest of that on lower volume like we did here, but then getting an above average volume rejection hard away from there, claiming that as a midterm resistance level, that could open you guys up for a downside test to that 200 period here on the 4-hour, whereas bulls holding this level and having an ascending 50 period on the 4-hour chart could help push through all-time highs without too much backsliding. And by the way, I'd like to make this clear. I think the further into April you're watching this video, I think you're at more of an advantage because you can actually look and see how this is played out, and you have the benefit of, I suppose, hindsight as we're recording this. And you could potentially use that information to make even better decisions. Now, let's move on here to probably the chart that has the most eyeballs. Not probably, this is the chart that has the most eyeballs. This is the daily. Okay, really simple here on the daily. That 50-day moving average is currently at like 460, 458, 460 bulls. It would be great to see that thing claim 5. The stock itself holding above $500 a share, whether pushing into all-time highs or not, if that 50-day moving average could push up and claim $500 itself, that would be a massive power move out of the bulls. Bears, on the flip side, of course, you want that 50-day moving average staying below $500 a share to keep as few psychological barriers for a crack back down below $500 as possible, right? Now, two areas that I'm looking at here, bulls, a crack of all-time highs, a reclaim of ideally 525 may act as a psychological level upon a crack, and hold, right? That hold is very important. And I'm not talking for one day, I'm talking a multi-day hold of 525. That opens up for that next level, which, 550 is the next obvious level that I would be watching upon that occurring. And, through there, it's not crazy to just toss out there the fact that 600 would also be a really important psychological level, given the recent movement in the stock in the last couple of months here. Bears, for you guys here on the daily, just big picture stuff, A crack below 5 is ideal, but this 480 region you can see here has really been kind of an obvious range of being respected on both sides of the ball, resistance and support. So cracking below 5, but ideally cracking below 480, hopefully before that 50 period crosses over, because if that starts to cross over, it might make it a little tougher. But really getting below 5, 480, and the 50-day moving average, that would be a power move out of the bears. And by the way, in both of these cases, the power move situations, you'd likely see additional volume with further position taking out of either side. Now, implied volatility, highly important, especially if you're trading options, compared to the last 3 or 4 months, is sitting in the mid to high range. Just keep in mind, the higher IV goes, the higher the potential risk, I should say, of IV crush. Okay, so just keep that in mind. Now, let's take a quick peek at the volume profile here on the weekly. Okay, now we do have earnings, by the way, coming up on April 24th after the market closes, so that's, of course, something to keep an eye on here throughout April. Now, if we look at the volume profile, volume has been a little lower this year, on average, just perhaps slightly below average this year. Okay, but since the beginning of the year, and we're only 1 day into the week as I'm recording this, so that candle on the very end is red just because today was a red day and it's a Monday right now. Since the beginning of 2024, if we exclude that, there has only been 2 red weeks. And, it's not like they were on massive volume either. So just something to consider here, that we are seeing a rather obvious bullish bias in the volume profile here on Meta. Just something I'm keeping in mind. But the volume is a little bit lower, so I'm taking that with a grain of salt. Smaller sample size. Now, options bias. If you take a look up top quick, this is the put-call ratio. Keep in mind, 1.0 is equal amounts of puts and calls in terms of open interest. This is showing since the beginning of 2024. This spiked to 0.81. By the way, below 1.0 is a call-heavy bias in terms of open interest, so the lower this goes, the more extreme the call bias becomes. And it has since faded and currently sits at 0.75. Okay, so we are seeing a call-side bias here in terms of open interest on the put-call ratio on Meta. Now, last thing to take a look at here, expected move. The last expiration in April on Meta is April 26th. So by close on April 26th, as of right now, the options chain is pricing in a plus or minus $60.40 move per share. Okay, by the end of April, approximately April 26th. Now, this will change over the course of April a little bit, okay? But as of right now, that means that the options traders are seeing Meta at near the end of April, at close on April 26th, at either 563 in that region, or down as far as around 443. Now keep in mind, expected move, that's a technical term. It's actually priced based on the implied volatility at each expiration. Okay, but that's the volatility expectation out of the market. So all the analysis we just did, including the put-call ratio up top, that helps us determine, okay, what's the market seeing in terms of directional bias? And then we look at volatility bias to help us make better decisions, especially if trading options. Understanding that volatility bias, or expectation more so, helps us decide, okay, should we be selling to open positions? Or should we perhaps be buying contracts if we're going to trade options at all, if we have a strong enough directional bias? So listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it. By the way, if your goal is to try to expedite this process of whether that's part-time or going even full-time as a trader, highly encourage you to take a look at our Roensch Capital Gold server. I'm working, especially directly with my Platinum one-on-one members, but the whole group in general, every single day, sending out my scalp setup alerts, in-play stock alerts, unusual options activity. That's verified by me, but each alert gets verified by me before it gets sent, to ensure that the options order is truly unusual. That's kind of how I keep track of what the whales are up to. Swing trade setup alerts as they come, and then of course my Platinum one-on-one members every single day. That link in the pinned comment, that'll let you get grandfathered in at the current rate. Hope to see you join, and I'll see you in the next one.